G'day fellow crypto pioneers and digital dreamers. Welcome to this November 8th, 2025 edition of the daily Bitcoin and cryptocurrency update. I'm Sash, your dedicated guide through the ever-shifting sands of the blockchain universe, coming to you from the vibrant streets of Melbourne. Currently pretty wet and rain hasn't stopped, but let's ditch the standard video opener, no hype reels or over-the-top animations today. Instead, we're diving straight into something more personal, my daily ritual. Every evening, as the hustle of the day winds down and the Southern Cross starts twinkling above, I take a moment to reconnect with the essence of Bitcoin and cryptocurrency. I power up my hardware wallet, review the day's transactions on the chain, and reflect on how this technology isn't just about numbers on a screen. It's a profound shift in power from centralized institutions to individuals like you and me. Think about it. Bitcoin emerged from the ashes of the 2008 financial crisis, a beacon of hope crafted by the mysterious Satoshi Nakamoto. It's not merely digital money, it's a tool for sovereignty, enabling borderless transactions, protecting against inflation, and empowering the unbanked across the globe. My belief in its transformative power runs deep. I've seen it revolutionize remittances for families, fuel startups in emerging markets, and ever challenge outdated monetary policies. In Australia, where we are blessed with innovation but burdened by traditional banking inertia, crypto represents a chance to leapfrog into a future where financial freedom is the norm. If you're watching this, chances are you'll share that spark, that unshakable faith in decentralization, potential to reshape society. So, whether you're a seasoned hodler, weathering the storms as we are at the moment, or a newcomer dipping your toes, let's make this session our shared ritual. Grab your favorite brew, settle in, and prepare for an epic journey through today's developments. We've got tons of insights ahead because in crypto, the details matter, and we're going all in. Before we plunge into the nitty-gritty of market moves and tech triumphs, let's inject a bit of humor to keep things lively, because crypto can be intense and a good laugh is the best volatility buffer. Today's original joke, straight from the depths of my Melbourne-inspired wit. Why did the Bitcoin refuse to go to the party with Ethereum? Because it heard there'd be too many gas fees and not enough block space for a good time. All right. I know it's a bit cheesy, but in a world where fees can eat your profits, it's spot on. Well, if that got a groan or a green out of you, hit the comments with your own crypto quip. Maybe something about altcoins crashing the bash. Who's got a better one? Let's see if we can top this in the next video. All right. Let's ground this ritual in our own backyard, focusing on the latest Bitcoin and cryptocurrency buzz right here in Melbourne and across Australia. This is where the rubber meets the road for us Aussies, as local developments aren't just news. They're shaping how we interact with this tech daily. First up, the headline that's got the entire fintech community a buzz: BlackRock. the global investment titan managing trillions, is gearing up to launch its iShares Bitcoin ETF on the Australian Securities Exchange ASX right in the middle of this month. This isn't some minor update, it's a monumental step forward. For context, BlackRock's US-based Bitcoin ETF has already amassed over 140 billion in assets, and now they're bringing a similar spot ETF down under with a competitive 0.39% management fee. What does this mean practically? Aussies can now gain exposure to Bitcoin's price movement through a regulated, exchange-traded product. No need to deal with private keys, exchanges, or the complexities of self-custody. It's as straightforward as buying shares in BHP or Woolies. Let's break this down further. Under Australia's evolving digital asset regulations, this ETF aligns perfectly with the government's push for safer crypto integration. Remember the 2023 reforms by the Australian Securities and Investment Commission, also known as ASIC? They've paved the way for products like this, ensuring investor protections while fostering innovation. For Melbourne's thriving startup scene, think hubs like Stone and Chalk or the local blockchain meetups, this could mean an influx of capital. Imagine superannuation funds, which manage over $3.5 trillion Australian, allocating even a small percentage to Bitcoin via this ETF. We're talking potential billions flowing into the ecosystem, boosting liquidity and reducing volatility over time. But it's not without questions. Will smaller investors get squeezed out by institutional dominance? How will tax implications play out under the ATO's capital gains rules? I'll dive deeper in analysis later, but for now, if you're in Victoria or beyond, this is your cue to review your portfolio strategies. Shifting gears to another groundbreaking local innovation, Block Earner has just cleared the regulatory hurdles to roll one of Australia's first Bitcoin-backed home loans. This is huge. Picture using your Bitcoin holdings as collateral to secure a mortgage without selling your assets and triggering taxable events. In a housing market where Melbourne prices average over $900,000 Australian, this blends crypto's upside with real-world needs. No more liquidating during dips. Instead, borrow against your stack at competitive rates, keeping your hodl intact. This product comes hot on the heels of similar pilots in the US, but tailored to Aussie laws, including compliance with the National Consumer Credit Protection Act. Market trends are aligning too, with Bitcoin stabilizing around $158 and $151 today, and ETF excitement brewing. We're seeing increased adoption in everyday finance. Other tidbits from the week: Sydney-based exchanges report a 15% uptick in trading volumes, while Brisbane's DeFi projects are experimenting with tokenized real estate. To make this tangible, let's consider case studies. Suppose you're a young professional in Melbourne eyeing your first home. This loan could let you leverage BTC accumulated over years without cashing out. Or, for investors, it's a way to access liquidity while betting on long-term appreciation. Regulatory changes are key here. The recent updates to AUSTRAC's anti-money laundering rules have made such product viable, ensuring they are not just innovative, but secure. Broader trends? Well, Australia's crypto market cap has grown 25% year over year, driven by tech hubs in Melbourne and partnerships with global players. If this sparks ideas, head over to cryptologic.com.au for more news updates on these developments. Who's thinking about applying for one of these loans? Or are you all in on the ETF? Drop your thoughts. Let's build this conversation. Now, that we've got our local lens sharpened, let's expand our view to the worldwide stage, because crypto is a borderless beast, and what happens in New York or Singapore echoes right back to Melbourne. Starting with the king, Bitcoin's current price sits at $158,000 and $151, clinging tenaciously after October's brutal Red October correction that shaved off nearly all of 2025's earlier gains. The total crypto market cap plunged 20% from its peaks, with BTC briefly dipping to 156,000 before rebounding. Factors at play: lingering Federal Reserve uncertainties in the US, coupled with a broader risk-off sentiment from AI stock volatility. Yet, this feels like a classic shakeout. Long-term holders are accumulating, and the fundamentals scream resilience. Delving deeper into the market movements, spot Bitcoin ETFs globally are a bright spot, with projections for inflows pushing prices towards 177,000 by month's end if trends hold. Institutional appetite is voracious. JPMorgan alone has ramped up its stake in BlackRock's IBIT to $536 million, a 65% increase since mid-year, alongside Ethereum positions and bets on crypto firms. This signals a maturation where big money views BTC as a portfolio staple, akin to gold or bonds. On the altcoin front, XRP is stealing the show with ETF hype in full swing. Filings are in the critical 20-day review window, and prices are poised for a breakout to $4.40. Ripple's recent $500 million funding round at a $62 billion valuation is jet fuel for this, earmarked for expanding payment networks and challenging traditional systems like SWIFT. Tech advancements abound. Ethereum shattered its transaction per second record at 24,192 thanks to layer 2 scaling solutions like Optimism and Arbitrum, making DeFi more accessible and efficient. Privacy coins are popping too. Zcash surged 24% to $985, appealing to those prioritizing anonymity in an increasingly surveilled digital world. Geopolitical angles: Kazakhstan's building a national crypto reserve worth $780 million to $1.56 billion, joining nations like El Salvador in sovereign adoption. However, challenges persist. Altcoins extended losses, with AI-themed tokens as outliers, and miners like Northern Data pivoting from BTC to AI infrastructure amid energy debates. How does this tie back globally? If BTC holds above 159,000 resistance, we could see a rally to 195,000 Australian dollars. Otherwise, retests at around 140,000 loom. For Aussies, this underscores diversification. Watch how global ETF flows influence our local launches. Curious about your portfolio's global exposure? Share in the comments, and for more updates, check cryptologic.com.au. Now, let's roll up our sleeves for the meaty part, an exhaustive, in-depth analysis of today's news, exploring implications, breakthroughs, and how they ripple through local and global markets. Starting with BlackRock's ASX ETF, this is more than a product launch. It's an ecosystem infrastructure. By mirroring their US powerhouse, it mitigates custody risks for Aussies, potentially channeling 3.1 billion in APAC capital by early 2026. Locally, super funds like Host Plus or REST might shift 1 to 2% allocations, injecting $15 billion market-wide. But zoom out. This could tighten regulations, benefiting majors while challenging boutique exchanges. Globally, it syncs with the ETF boom, where institutions control 5% and plus of BTC supply, undervalued compared to gold, per JPM analysts. October's deep dissection, a 20% cap and ever sure? Its exhaustion selling from short-term speculators, but whales scooped 375,000 BTC last month. Implications? With 70% odds on December Fed cuts, parabolic gains await. Sans that 140,000 tests. XRP's momentum, ETF green lights could attract 78 billion AUM, supercharging Ripple's cross-border payments. ETH's TPS milestone, it heralds DeFi scalability, reducing fees and onboarding millions. Zcash's rise, privacy tech's renaissance amid data privacy laws, local global nexus. Aussie Bitcoin loans could inspire US equivalents, democratizing access. Sovereign reserves like Kazakhstan stabilize BTC as digital gold. Risks, regulatory pivots or AI bubbles bursting. My conviction, volatility forges progress, Bitcoin's revolution thrives in adversity. What's your take on these shifts? For more analysis, visit CRYPTOLOGIC.com.au. Shifting to empowerment mode because understanding crypto is your ultimate edge. Disclaimer. This is a upfront disclaimer. I'm not a financial advisor. This is purely educational to help you navigate wisely. Always do your own research. Let's start with Bitcoin fundamentals. It's a peer-to-peer electronic cash system secured by proof of work where miners compete to solve cryptographic puzzles, adding blocks to an immutable ledger. This prevents double spending and ensures decentralization. Analogy, like a global notebook where everyone verifies entries. The halving event every 4 years halves miner rewards, mimicking gold's scarcity. The latest one tightened supply, contributing to the current dynamics. Smart strategies, not an advice, so consider dollar cost averaging, DCA, investing fixed amounts regularly to average out volatility, say around $75 per week or on a weekly basis. Portfolio balance, perhaps 50 to 70% in Bitcoin, Ethereum for stability, 10 to 20% in alts for growth, rest in stables like USDT. Security essentials, opt for hardware wallets, example Ledger, over software. Use multi-factor authentication, generate strong seeds offline. Scam avoidance. Spot phishing by checking URLs meticulously. Ignore unsolicited investment opportunities. Protection tips. In Australia, leverage ASIC's resources for complaints. Globally, use blockchain explorers for transaction verification. Broadening out, explore how tokenization applies to real assets like property in Bitcoin loans or AI's role in predictive trading bots. Consumer safeguards. Understand smart contract audits and decentralized exchanges, pros and cons. This knowledge builds confidence. Remember, education turns fear into opportunity. To fuel your journey further, there's a wealth of online resources out there, from free videos and articles to interactive tools that deepen your crypto knowledge. My personal insight, crypto's true power lies in its ability to empower. It transformed my financial outlook, and I believe it can do the same for you, fostering independence in an uncertain world. If today's insights have you hungry for more, head over to cryptologic.com.au for additional news, updates, and info on these topics. Shout outs. Cheers to Aussie Hodler for nailing that XRP analysis. Brilliant. Melbourne Miner, your security tip was gold. Like if this deep dive hit home, subscribe for the next video, and share with your network. Tomorrow's tease, maybe, diving into alt season signals. Comment your end of year predictions. This is CryptoLogic Passion Powered Protocol. Stay empowered, keep stacking, and embrace the decentralized dawn. Catch you in the blockchain.